But let's go across to our first discussion here on the program. Sandeep Tandon is founder and chief investment officer at Quant Mutual Fund. He's joining us early on. Sandeep, good morning. Great to see you in the morning on the program here at CNBC-TV18. Appreciate your time. And congratulations, you were first off the block in releasing the results of the sort of stress test for the mid-cap and small-cap parts of your portfolio. So we got the numbers and we'll put the graphics up, etc. The way the data has been provided, the sort of crucial kind of operative part, which everyone is focused on, is how many days will it take for funds to liquidate 25% of the portfolio and then 50% of the portfolio, right? And the simplistic way it's being kind of implemented is the lower the number of days, the better. Lesser riskier because the portfolio is more liquid. So just talk to us about what you've done in terms of the presentation you've put out, and of course the explanation as well. Is that the right way to look at it? Go on.
So Prashant, we have not done any major changes because this announcement came in the Feb end, and the data which we have to provide also has to be on the Feb end. What we have to look at is that, at Quant Mutual Fund, our both small and mid, our portfolio are fairly liquid. Okay, if you really look at for last 1.5 years, okay, right from September 2021, when we talked about that there's a euphoric phase globally which has peaked out, the easy bull run has peaked out. So we talked about how we have moved gradually towards a large cap also. So we are nearly 30%, 28 to 30% is the number where we have large cap stock also in our mid and small cap portfolio. It's a part of our strategy, how we manage money in a dynamic way based on the environment which is changing, whether risk on or risk off, or aggressive risk on or aggressive risk off. So we are trying to do, if you really look at what regulator is also trying to convey, they're not putting any restrictions. Basically they are trying to ask AMC that you should look at, even you should ask your investor what is their risk appetite, what is their investment horizon after mid and small and has rallied. Okay, and they're talking about disclosing more data points. Okay, basically talking about what is the risk level of your portfolio, what is the liquidity level of portfolio, so that investors should aware of, okay, when they're participating or they're increasing the exposure in mid and small cap, or whether they like to switch to other schemes or they want to hold the scheme. So it's a part of a more transparency regulator is asking, and we are trying to give that data. So it's a step in the right direction. In fact, if you really look at lot of data points, we actually have started giving in our annual monthly fact sheets also. Okay, so a lot of risk related measures we already provide in our monthly fact sheet, so that not only for these two schemes, but we provide actually for all the schemes which we manage. So it is a more of a transparency with the investor. They should understand their the scheme risk profile, the liquidity aspect, and how the performance has been from a risk adjusted point of view.
Yeah, no, that's well put. So that's a good explanation. Sandeep, you are putting out the data for your fund, but we've also got data from others, Edelweiss, Aditya Birla, Sundaram, Motilal, Axis, and we'll get more as the day goes on. But you're a fund manager as well. You're an active hands-on fund manager as well. And this was something which market participants were waiting for, this data. Is there any takeaway looking at the disclosure so far for you, or will you take away anything when you look at these portfolios?
The only thing which I like to take away, it is a step in right direction in terms of more transparency and more disclosure. Okay, I don't think I will like to read beyond that, because there is no classic signs of euphoria which has happened in the Indian equities, and multiple times I've said that that global euphoria we saw 2021, particularly in the growth stock or technology stock or fintech. But if you really look at from the current level, when I don't look at, yes, there could be hype in many sectors or maybe certain pockets, there could be hype, but that is a part of a market. As a risk manager, we do have to rebalance and reconstruct our portfolio. That's what is we do it anyway dynamically. When we see some hype getting built, we prune down exposure and look for new opportunity, new sector, new stock. That's a part of any money manager. We have to do that. But if you really look at, if market is worried about that we have seen extraordinary hype got built or extraordinary euphoria, so I will carry you purely from a predictive analytics point of view. I have been very vocal. We are not seeing any classic signs of euphoria. You leave apart few pockets, but if I look at the broader market, which is not, let's understand when you look at this data, I always talk about in unidirectional, purely on the valuation, you might feel that they are stretched. Answer is yes, but if you really look at some of the data which NC, we have taken from the NSE or the Bloomberg data, if you look at the P multiple also, though it's not the right way of looking the real valuation, it's just one of the data points which we talk about. Yes, small caps is particularly 250 index is marginally higher than the what was there in the COVID lows. But if you really look at the mid cap itself, they're very close to pre-COVID lows. It's not like that. There also it is stretched. Yes, it can be expensive, but I don't agree with those. The P multiples are significantly stretched as compared to what happened in 2018 or what happened into post-COVID scenario also. So that is the one aspect we have to understand.
Okay.
They are expensive, but they are not stretched. And similarly, you also have to look at the what is the liquidity situation. Liquidity situation, particularly the good liquidity, with the way we define more from a macro data point for India, is very conducive. Actually, is month on month, right from last many months, is actually increasing. Okay, and the good news is that from October, November, the India risk appetite, okay, as a country, our risk appetite has actually moved up. So it's a very constructive background for Indian equity.
Got it.
That's what we are trying to say. It's opportunity sometimes. Yes, obviously you have to assess your risk profiling. You have to assess your investment horizon, because a lot of
Got it.
people buy from long-term perspective and market corrects. Their horizon changes overnight. So those are the aspects you have to, and this is what regulator is asking, that you reassess.
So got it. Sandeep, hi, this is Sonia here. Good morning and thanks for joining us. So you said that the stress test only helps increase transparency in the entire sector and you're not too worried about the PE multiples at the moment. They are a bit stretched, but there's no euphoria that is set into the market just yet. Got that. I want to ask you a little bit about the redemption situation. What has it been like from the retail end in the last 2 weeks? Because people are genuinely concerned about the kind of erosion that they've seen in their portfolio. Have you seen any major signs of redemptions?
At least at our end, we have not seen anything dramatic, which we can say the inflation. In fact, our flow has been remain as it is. But yes, sometime in market correct, a lot of people who are weak player, whether in the mutual fund side or in the market, they tend to get capitulated. Okay. So and this time, if you really look at, I always have been talking about that Indian retail investor has become much more mature. And when I say maturity level, they don't get carried away so easily. They don't get capitulated. So I have seen a trend. If I look at last 3 years, particularly from post-COVID, okay, when we have seen how the behavior pattern of real retail investor has changed. Whenever there's a crisis, market correct sharply. Actually, at our end, we have seen the flow actually increases significantly. And when market rallies, they tend to book profits. The problem is not with the real retail. The problem is more from the family offices side, ultra HNI side, who also run a lot of leverage positions, extraordinary exposure in the equity side. I think those are the people who are getting more capitulated this time, and they have made tons of money. Their exposure has increased significantly. I think panic is there in certain pockets, more from this particular category which we are referring, because these are the people who have participated in the SMEs, they have participated in the private equity side, they have participated in all possible instruments in the market. When you are obviously made extraordinary money in the market correct, then it's a panic situation out there. But from a real retail point of view, I don't see whatever data which we look at on daily basis, we don't see any situation of panic.
Okay, got it. That's good to hear that the panic is where people have taken more leverage, maybe, in the SME space, etc. But at the retail end, not too much. Got that. One more question from my end on PSUs, because this is a space that you've been very bullish on for a while across the board, right? And it's done very well. At this point in time, what is your view?
So I think the way we look at PSUs also, we have been talking about value as a thesis. Okay? And PSU, overall PSU, not only PSU banks, are part of a value thesis. And we right from September, October 2021, we saying this decade belongs to value. And we are one of the few houses who has written in 2019 about that Japan will be the biggest comeback story. And Japan by 2023 will make all-time high, which happened. And you look at Japan is a value market. Okay, well, that's the reason I'm referring. Japan is one of the biggest value market. Like US, people consider as a growth market. Japan is a value market, and a lot of limited people could have ever visualized that Japan will make all-time high or what happened after 80s. So what we are trying to look at the market is that don't look at just PSU as a PSU theme. It's a larger basket of a value thesis which is playing, and PSU is part of that. And then if you come to within PSU also, I've been very vocal about it. Something has changed, okay? Both from the governance point of view, capital allocation point of view, and the perception about the Indian PSU in particular, where a lot of money managers used to say this is untouchable, this is something I will not touch. But the way I look at something has changed and something will change further. So these sector, particularly all PSU, I'm not talking about one or two individual names or illiquid names in PSU which have rallied significantly. Obviously, they will need to correct and they will correct further. But from a larger cap perspective, I think we remain very constructive. If I talk about quant perception analytics for the PSU, I think is only increasing month on month. So we are very constructive. But from a medium to longer term perspective, I'm not talking about just from a very short term or near term perspective. Somebody has a longer term horizon. I think that's an area which I would like to remain invested.
All right. Hi, Sandeep. Good morning and good to hear your thoughts on PSUs. We'd like to know more about that. But I want to talk about one of those darlings of the market which have been quite disastrous in the last few days, Swan Energy. You know, y'all were early in there. I think y'all got in at around 300 rupees or thereabouts. And then y'all participated in the QIP as well. But that stock has taken a hard knock from the top. I wanted your clarification on this. Have you all been sellers? Are you still?
Nigel,
what is the outlook on this one?
Yeah. Generally, we don't comment from a compliance perspective on individual stocks. But I will talk about infra has been like, you know, we have been very bullish on India infrastructure story. We still like it. And if you ask me if I break the from a noise perspective, that's a different issue. But if I talk about capital good versus broader infra, I think the capital good stocks are peaking out. They are extraordinary, euphoric right now. Their P multiples are very much stretched. But if I have to talk about larger construction space or larger infra space, okay, and whether you talk about even the utility companies or the infra names or the equipment providers, I think India is growing so sharply. Okay, then these are the names which we do very well. And this is part of now talking about defense opportunity. So it's a combination which we look at, you know, as an institution player, we don't get paranoid with 1 or 2 days fall, because if somebody has built leverage exposure, okay, they tend to get capitulated. And this what happened is not only about particular one company, the entire market, okay. Even the best of the names corrected 8, 10, 12%, okay. I'm talking about not the penny stocks. It's the large cap companies were down 8, 10% yesterday or day before yesterday. So you have to look at, as an institution, we have taken a conscious call. It's a 2-3 years perspective, which we are very bullish. So we like to remain invested in some of these names and look for more opportunity in the sector where we are bullish.
Yeah. Sandeep, you know, last time we spoke, and just to go back to that PSU thing, right? You said, and your idea was larger PSUs. You know, your Coal India, your ONGC, LIC. These were some of the names that we discussed, you know, without specific recommendations per se. So should one take to understand, I mean, that's a space broadly, the larger top-tier PSUs across sectors, where you focused on, and remain very bullish?
Yes, we have participated. If you really look at in last, right from I said September, October 2020. First, we played out PSU banks as a thesis. Okay, we were the first to get this out there, and we actually made good amount of money. Over a period of last few quarters or few months, we have pruned down PSU bank exposure in overall portfolio. Except one name, the entire portfolio we have moved on. But we have moved towards other stocks. Okay. As what we discussed, the larger PSU, not necessarily bank, you know. See, when you look at, Prashant, when we look at our analytic framework, we do look at in terms of which are the stocks which are traded in the neglected zone and which move to the admired zone. So it's a natural phenomena. All the stocks which move to admired territory, we tend to prune down, and the stocks which are in the neglected zone, we tend to add. This is what we do. So we felt many PSU banks moved to the admired territory, not over admired territory, but they were in admired territory. And hence we pruned down, and some of the names which mentioned, they were still traded in the neglected, despite being the more liquid names, very large market cap companies. So they have obviously become the obvious choice. If you really look at in our portfolio in last many months, what we are trying to see, we were very early to move out a very substantial portion of our portfolio within mid and small cap basket towards large cap. More from a liquidity perspective, and even some of these names we actually generated massive alpha for our investors. So it's our perspective when we see any signs of any changes in terms of data analytics, when we try to rebalance our portfolio, today our portfolio, in fact, when the stress test came out, our portfolio is very liquid. In fact, what regulator has asked about the stress test, it is based on certain assumptions which they have given. So these stress tests are actually very conservative. Okay, but in real life, like,
yeah. No, I got that. Just one quick point, some have pointed this out, that in terms of so for example, day before yesterday was an extraordinary day. I mean, there was the index itself fell about 5%. Mutual fund NAVs, not just for you, but others as well, fell sharply. I mean, 4-5% in some cases in a single day. Now, that's a sharp hit. And because we've not had a significant correction for a while, I mean, sort of it in that way hit harder. Is there any change you would sort of effect as a money manager in the style, or not really, given what we saw, that what can happen? I mean, you've seen this in the past, but none of us have seen this in the recent past. We're kind of used to a very trending higher market. Go on.
But if you, Prashant, if you really look at the bull run, let's say the bull run which started from April 2020, okay, and until now, nearly 4 years has passed. And n number of times, at least I can say on multiple occasions, maybe 5-6 occasions, we have seen a very sharp fall in the market. And you also have to keep in mind that March is the phenomena which even last year, March also, February, March market corrected very sharply. Because it's a year-end phenomena, a lot of people unwind their position, a lot of corporates don't want to show the exposure in the equity street. So it's a phenomenon, a lot of people just unwind their trades by the year-end, okay? And so it's a more of a year-end phenomena which market was talking about, we do understand. Then over and above, market was slightly stretched, we have seen right from October till February, massive rally. So when market was slightly stretched, slightly overbought, when I say stretched from an overbought perspective, one vertical move you saw. So obviously correction was due, okay, and when correction happens with various reasons, okay, 2-3 events which triggered suddenly this fall. So I think the narrative was something got changed from a very near-term perspective. But if I have to look at the reality of the Indian macro story, I think we remain very constructive. Okay, if you really look at in last 4 years, n number of times we have seen 10%, 15%, 20% correction also is not happening just for the first time. Now it's up to us whether you want to get capitulated and give up and move out, or if you believe India's story, which we believe, I will look for a buying opportunity. It's a classic capitulation which happened. In fact, a month back, some of these small cap and mid caps also were looking very stretched in terms of valuation aspect, which we talked about. But again, many names becomes very attractive. So what we have to look at in this environment, liquidity is very important. So you have to buy the more liquid names rather than buying the illiquid names going forward.
Okay, Sandeep, thanks a lot for your time this morning and appreciate your thoughts as well. That is Quant Mutual Fund saying that the stress tests and additional disclosures are a step in the right direction and it will help increase transparency, and there's no dramatic signs of redemption coming in from retail just yet. Let's sip